So Root, how you doing?
Thanks for having me, Jordan. It's great to be back.
So glad to have you back, Root. We so much enjoyed our first conversation. Everything that you continue to add to the space, and it's not often we get to sit down with someone who has a history of being on the right side as you do. So we're excited for this one.
Thank you. I'm very excited to have another chat, and I'm sure there's a lot to discuss. Lots of things happened. It's been how much time has passed since the last time? A few months or so. It's incredible what has happened, in the meantime. So
looking forward to it here too as well, Ruth. So much to talk about.
Okay. Well, I don't know. You want to go into the first chart or?
Yeah, let's start. Let's dig into the charts right now. We're looking at a comparison of the Bitcoin cycles.
Yeah, exactly. So here I'm comparing basically the bull markets from the previous all-time high until the new all-time high from all cycles, even 2011 included. And I highlighted the consolidation periods in color. And you can see in 2013 that it took quite a long time, very comparable to current cycle. In 2017, we had a slight different bull market. It was not a double top, but just a single top, and so smaller drawdowns. And so a slightly different behavior, but nonetheless, like you can see a clear trend. And I still think we will in the next months we will see a steep line up on the current chart as well. And I've drawn here in this chart like the two small dotted lines, the 30 days and 50 days. I think we will more or less, close the consolidation. So basically that means that we will make a new all-time high around that period. I mean, it could be sooner too, but we've gone so steep up in the last few days. It's incredible. If we go a bit more sideways or have some slight drawdown still before we close, make a new all-time high, that would be very natural as well. So I think the end of October, November, we would definitely see a new all-time high, in my opinion, if things to keep being in line with history. And it's very interesting. I don't know if you have any questions about this chart in particular.
When you say, expected 30 to 50 days out, whether, late October into November, is that going off of how long it took here for price to make the new all-time high? Or is this going off of maybe the slope of the angle that you're going to show us in a little bit coming into the mid-cycle shakeout? What are these?
Yeah. So in terms of days, in 2013, it just, the cycle naturally takes if we have a double top, it takes time, to make a bottom, and it takes time to recover. And so this is, several news events happen in between, obviously. And the market has also gotten a bit bigger. I mean, so the tide has to turn, and so I think also because in terms of days, if you look from the beginning, we actually, in terms of days, we're actually, we had this a bit, the all-time high. It took longer to make an all-time high than previous cycles, right? So it just, maybe that has to do with the size of the market, that it takes a little longer to turn the tide, let's say.
Just to clarify for everyone what Root has this doing. He's looking at days since the previous all-time high is made. And if you look at what's happening here, where this is approximately, let's just call it price made a new all-time high around day 245. Over here, we've surpassed that since the new previous all-time high, approximately over here on day 300. So we could say it took longer. And then we could also look at it a different way. We could say, well, from the time of the peak of the first peak of the cycle to how many days price made a new all-time high, we're still under that. From 2013, it took a little bit longer. It would be approximately October 28th when if price makes a new all-time high or prior, the distance between the two peaks, it will be smaller. But when we're looking at this, where we're saying, well, from the time that price made the previous cycle all-time high, it's actually taking more days than any other cycle.
Exactly. Yeah. So we still have we're actually still around 30 days out or so from the previous. So how long it took in 2013, and now that does not have to be exactly the same. It doesn't have to be exactly the same amount of days, but the general trend is here. Like, so we have a double top, and so once you make a top, and in 2013 we definitely make like a blow off top. It takes time to get to and to form a new bottom and to recover, and I think in that we have it's very similar in current cycle. And so if you take from the maybe we can go into the next chart soon, but so if you
quick question before we move on, and then I'll move over so you could continue. And that's, you mentioned that this cycle is very similar to what we saw in 2013 with that longer consolidation. I'm looking at the slopes of 2017 and 2021. They're pretty similar. Are we expecting, or are you expecting personally, another sharp up move at end of the cycle? Perhaps even because of the consolidation, sharper than we saw in 2017? Or we've seen each cycle peaking with this parabolic move. Is there anything that you're looking at so far that might say that's not something that we should expect?
No, I actually think all of history, if history keeps repeating, then we could expect definitely another steep line there at the end. And, many comments actually below this chart often said like, oh, what if you draw like a line from the tops, the peaks, of 2011, 13, 17, 21. So if you draw a straight line basically from all those tops, then does that, give us a top, like the diminishing returns kind of, like the theory, and actually I don't think like that's the case, that's not really the way to look at it. Sure. I actually think we could see a steeper top than in 2017. But I mean, it'll depend, but I don't think, I actually, also plan B has mentioned this, that 2017 might be the exception, that we just had like a bit of if you and again, if you look at stock to flow, so in 2017 we like that in 2017 we might underperform compared to like in 21 that we're going to catch up. And that, so to me it's definitely not, I'm not a huge believer in diminishing returns yet. I think we could still see a bigger increase.
That's interesting too, Ruth. We were also, the Fed was also tightening their monetary policy over here. It makes sense why we might have underperformed a little bit more over here. 2013, we were actually looking at a lot looser monetary supply. But now we're looking at an uber easy monetary supply. I wonder if that has an effect on that. And interesting to hear that 2017 may have actually been an anomaly on the downside. It's something I've never, had the perspective of viewing it from that lens before.
Yeah. So that's something just to keep in mind. I mean, I'm not totally saying that we might not have diminishing returns. I mean, it's definitely a possibility. And the way I go from there is kind of like, I mean, if we're starting to make a steep line there on the end, like obviously I'm gonna look at several on-chain indicators and to see if we can estimate the top, and that should give us an indication, but it's too early to call yet. I mean, we can still, in my opinion, there's still, the next months will be very exciting, and especially once we start making new all-time highs. I think it will give us more info on where this market is going and on how high the price would go. But I can maybe talk more about that in some other charts that we'll get to later.
Very interesting. Ruth, this one over here, this was posted on July the 12th, about, roughly 10 days, 9 days before we bottomed out. You're here waiting for the mid-cycle low to be put in. And then shortly after, we're looking at, after that mid-cycle low was put in, and what are we looking at on this chart with the angles?
Yeah, so these are again the same cycles as you saw in the previous chart. And so what I do here is like, so I draw this small blue line from the top till the bottom, and you mirror that line, and it gives a bit, like, the idea is just that it takes just as long to get down to the bottom as it takes, to recover again back up. And so I've drawn this blue line several times, trying to wait for the bottom and to just give an indication of how long more or less it could take to recover from the bottom, right? And I think this has done like a relatively good job. You can see in 2013 also, if you look at this chart, that we dropped below this blue line for some time, and then we finally make a new all-time high around like day 260 or so, day 270, around there. And so exactly there,
Very
yeah.
strong,
So
very strong cycle awareness. Yeah.
So we're a little bit below. So apparently it takes it takes a little longer. I mean, really, I think it gives a good indication like that. The general trend is just like the idea here was just it might take just as long to get down to the bottom as it might take to recover again back up. And so far that has done a pretty good job, in my opinion. I don't know if you have like a more recent version of this chart.
Yeah, very strong, by the way, very strong cycle awareness to understand how long it's taking you to come into the mid-cycle correction. Might take that long to come out, so that you understand if everything is happening on time. This is actually one that you just tweeted recently, about a week ago, Root, when you said, hey, within the next 30 days, price about a week ago must have been trading, well, significantly lower than it is. And you said, well, in about 30 days or so, we might see a new all-time high. And then let's just go ahead and add this one over here for us as well, Root.
Yeah, so I highlighted also these red circles, and when we were kind of at this bottom, at this drop, I was waiting again for the low, obviously, and I just highlighted these red circles to show like where we more or less are in the cycle. And you can see again that we have so much similarity with like the previous cycles. So I mean, based on history, it made sense to make a new all-time high in more or less 30 days. I mean, it could also be 20 or 50 days, to be honest. But yeah, more or less 30 days was like a good indication of like, and so I think the end of October, early November is like when we would see a new all-time high, more or less the latest. I mean, it could go sooner. We have gone up so steep now, but I expect, so now we're kind of touching this blue line, so it might make sense also to stay kind of below it for still some time, to have a little more small drawdown, and then before we really start reaching a new all-time high in current cycle.
Very, very good work over here. Very strong. I wonder, just speaking out loud, though, I mean, another way to view this over here is focusing on the area you highlighted, where we come back below that slope. And again, the slope is an average. What you're trying to say is not that we won't go below it, is that's the average of the angle. We want to be somewhere around there. And then pointing out at this particular point of cycle, this has happened each and every time. And we also like to talk about this as like from the mid-cycle low that you're looking at here, like wave one, that's the bottom of wave one, into wave two, and then the cycle peak, right? And you could see that both times, I'm just making this observation for the first time, that the correction of wave one in each of the cycles so far is actually taking us below the slope of that angle. That's interesting market behavior from the participants. And then what's also interesting, in 2013, we did consolidate for a while, right? Even taking out that low of the correction right there. So everyone right now maybe feeling a little bit different emotions than they were feeling a week ago. Just, don't get to this particular point of cycle, Root. It's very essential that everyone stays very calm. As emotions start getting away and people could make mistakes, we could still see some further pressure over here, whether it's sideways and or even taking out that low. And that would be well within expectations of what has happened in the past. So just be ready for it in case it does.
Exactly. And then still to add something for this, I mean, I've marked the bottoms as well in previous cycles. So you can see the bottom of 2014 and the bottom of 2018. And so I think we're like near a bottom of 2021 or the next bottom of the next bear market, I should say. And so
great observation over here. I just want to build off of what Root is sharing. By the way, this is a price spike, right? And you could see as price made made the new all-time high, that the retest that came in, right? This is the bear market, what ends up being the bear market low for 2014. Here's the breakout, the retest, and the resumption. This also occurs over here, exactly where Root points it out. You come in and here's the breakout to the new all-time high. You came in and you retested it. that wound up being the bear market low. It's possible over here, we don't have any price spikes like that occurred in 2013. So somewhere in this area over here, if we make a new all-time high and come in and retest that, there's a strong possibility that could potentially be the coming bear market low.
Exactly, yeah. And so it's interesting to note that you know, we're likely still below that bottom of you know, a potential bear market, and then I mean, there might be some changes. You know, I don't know. We can maybe discuss this further as well later on. But you know, like Willy Woo, for example, is quite talking about like how this might be the last cycle. And so I mean, for now, for current cycle, we're still very in line with previous cycles. So I have no reason to believe that anything is changing yet, but it could well be in the future, and we might have to see, like, once we make another top and maybe go into like a bear market. I mean, if things start looking differently, yeah, we might have like maybe smaller drawdowns, so not an 80% drop as we have seen in previous cycles. You know, if we would only get like a 30 or 40 or 50% drop, you know, in the next bear market, that would be a possibility maybe. So maybe, you know, but still, you know, in kind of like from thinking from a worst case perspective, I mean, it very much looks to me that that we're still below the bottom of the next bear market. So it's a very good time to stack, in my opinion, still.
Excellent stuff. And to recap off of what he's saying, listen, so far it appears that everything continues to really closely rhyme. We don't know if that's going to continue. We're always watching for where things might change. There's no indications we're seeing any of that occur yet. We're aware of everything and everyone we should be paying attention to give us to know as quickly as possible when that's happening. Right now, Bitcoin approximately $55,000 is potentially cheap if you're viewing it as that we are trading underneath potentially the coming bear market low. Whether or not that low winds up being something similar as we saw in the past cycles, or even because we're experiencing some type of different behavior, even higher than that, we simply don't know yet. Root, over here, we're looking at some RSI readings. I believe this is looking at price on a monthly, right? We're looking at price on a monthly timescale.
Well, the price is just the daily price data, but the RSI here is the monthly, 12 monthly RSI overlay. And and then I look at, obviously I zoom in here only again at the cycles, just as I've shown them before. So from the previous all-time high and then until a 70% drop. And you can again see this similarity. Obviously 2011 is very early, you know, like, so you know, the RSI, you know, price increases were so steep, you know, because you go from like 0.00 or like 1 cent or so to like, you know, 10 cents, and so it's a huge increase. So the RSI was quite high as well, but even there you can see this drop in the RSI like before the peak, you know, like towards the RSI 90, which is like the green line, the green dotted line here. So that drop exactly. And so we have seen this, you know, in 2013, you can see that, you know, during the first stop, we went above RSI 90. So for some time, we came back down below it, you know, we made a bottom, we started going up. And then in the month September, we had this flat month, you know, like a bit of a bad month in September compared to the other months, which was only up, right? And then you can see in 2017 again, like this similar behavior. We went above, you know, the RSI actually in the above 90, and then we came back below it, and actually due to September. And then we went again back above it, you know, like, and we made the top. And so far we have done the same, you know, so we went above it with the first peak, you know, in line with previous cycles, really. We went below it. We went a little lower than expected. I would have guessed, like, you know, an RSI around 70 would have been the bottom, but we went lower. We went even to like 60. So, but we started going up again. So we made a bottom, but now in September, we made again this bad month. And so, yeah, so far we've been going up again. So interesting to note here in this chart is that, you know, I did like this future projection here. You know, it's because I don't know how high this cycle will go, you know, and just to be conservative, I put here this top of 140K. And which gives us more or less, you know, a top of 100K around this green line, the green line around RSI 90. those actually also represent the best 21 days. So the top 21 days, basically, that the price is above, the best 21 days of Bitcoin in the top, the best top days. And so that would like indicate here a price above 100K, but I can scale the price of this last cycle. I mean, if you look at the top of the current cycle, so of the price, if we look at the price, the orange line, yeah, so that top, we could scale that down further, and because if you look at 2013 and 2017, you can see that this top is a lot lower, right? So I on purpose, I scaled it relatively high to be conservative, because that only gives us a top of 140K. But I mean, I could scale this down further, and then you would get a top of like 300K or stuff, or at least above 200K. So that is it's a bit arbitrary on how to scale this. But in this chart, I try to be conservative and just give it a top of 140K. But what is interesting is I also look at other on-chain indicators, for example, the thermocap or RHODL or so. Some thermocap likes to look at like miner revenue. You can Google for it, and you can. I mean, it's a bit more difficult to explain how exactly those things are calculated, but it has to do with like the supply of Bitcoin miner and how miners treat it. So a bit of a ratio between the miners and investors. That's what thermocap, and it has a very good. It's very good. It has been very good at indicating a cycle top as well. And then our HODL likes to look at HODL waves. So at the strength of HODL, and it looks at a ratio, I think, between like a week or 2 week HODL versus like a year to year HODL, and it gives also very good projection of the top. And so with some of these indicators, you can see interesting patterns, and so with our HODL, especially, for example, it gives us a top a lot higher than 140K if you would project it on here. So that's very interesting to see. And yeah, I will continue to explore it, and I'll post my updates on Twitter, so
really
you can follow.
Getting this type of lens of the 4-year cycle and seeing the similarities repeating using the RSI monthly overlapped on the daily price. And thanks for giving everyone, what I guess it's fair to say is, conservative expectations. It's really important, especially during this particular point of cycle, to really keep your expectations in check. Again, prepare for the worst and hope for the best. But good
Exactly.
stuff. Good stuff, Root. What are we looking at over here? This got a lot of attention. Your spiral chart work over here. We're going to look at this from a few different angles, right? We're going to look at this based on blocks. We'll look at this based on time. We'll start with this one right now. Hello, this one right here on the.
Yeah. So this is the spiral chart. Actually, credit to Clockwork Parts on Twitter. You can give them a follow as well. They actually came up with the concept of the posting like the Bitcoin price on this spiral. And I was really fascinated by it, so I started exploring this myself, because I thought like, okay, I can do like interesting tricks with this and see if we get some interesting new insights. And I was actually surprised with like the alignment, for example, of the 2013 first peak and the 2021 all-time high. They're at the same. Exactly at the same spot in time in the 4-year cycle, and that was just amazing. And then if you look at the 2013 and 17 top, that they occur at the same time, and so now, yeah, it makes sense. So I drew this other orange circle there in 2021. So that's December 2021. It makes sense to make a new all-time high there based on this chart, right? Like so, yeah, I think it's really a fascinating chart. I think it's one of the best charts to look at the 4-year cycle, because it really gives like a clear picture of the 4-year cycle, better than just a normal log chart, because this is on log scale. I mean, the price, you can see also that it goes, it increases by 10 by each line in the circle. And so yeah, it makes sense to hit that 100K mark, or higher. And still in 2021 as well, based on this chart, obviously.
Love this view. Love this view.
Yeah. So this chart actually also got the previous chart got also retweeted by the president of El Salvador, and so it's quite nice to see that he's looking at this stuff as well, right? So very interesting.
Very interesting. He also leaned in and bought the dip when he had
exactly. Yeah, he did actually good estimates of buying it, like good guesses
really well
on the dip as well. So it was it's pretty cool to see.
Like to see that.
So and then to further explore this chart, because Clockwork Parts, they just have this price chart, but I also started looking at this chart in blocks, in terms of blocks instead of time. Okay. And so because blocks is Bitcoin native, obviously, so it was very interesting to explore and see if we could see some similarities as well. Now the blocks really gives a bit of a different view, and you can see that it's a little more complex than the time-based chart. And to be honest, I lean more towards the time-based chart, because I like the simplicity of how the time-based chart just aligns all these things. In the blocks chart, you can see, the time chart is so simple compared to this chart, and so in a way, I think it's better to look at the time than blocks, but even though like blocks still gives us some other insights, and so if we look at the amount of blocks it took from the 2013 peak to the 2013 top, it's like around 40K blocks, let's say. So if we project those 40K blocks from the 2021 all-time high, we get sometime in the future. So like the estimate is more or less the 7th of February there, or like the middle of February until the middle of March, that orange circle again there. Okay. And you can also see that in terms of blocks, we had a bit of a lengthening cycle, right? So like the top took 16,000 blocks longer, the top came 16K blocks later than in 2013, the 2017 top. So that gives us all more or less again around that area. So that could be an indication that the top might maybe be a little later than December, and that we could actually see a top in the middle of February or March. And
very interesting though, very interesting. So this is, first of all, prefacing what it seems that maybe that paying the most attention to time-based is might be correct, but at the same time we have to Bitcoin native. This is not 4-year cycle. This is a 210,000 block cycle. Looking in, digging into the blocks, we make two very important observations. The lengthening of the peak of the bull market was approximately 16,500 blocks between 2013 and 2017. If that happens again, that's also confirming. That's why you get the later end of middle of the March. And if you're following how long it took us from the first cycle, the mid-cycle peak up until the cycle peak, approximately 42,500 blocks. That puts us somewhere around approximately the beginning of February. So this window, which is a pretty small window, you can make some about 30-day window over here, more or less 40 days, is, very, very important vantage point to look at, because ultimately price is going to let us know when the cycle's peaking. And if it's not in December, then all of a sudden, to lean in pretty closely to what's happening over here on blocks for that type of guide. That's some good work.
Exactly. So it gives us an alternative view, and it's definitely worth checking it out. Another interesting observation in this chart is that the 40K blocks in 2013, they actually went relatively fast. So it took about 7 or 8 months to have those 40K blocks, and that was actually because in 2013 a lot of ASICs came up, like new types of ASICs. So blocks were found relatively fast. The hash rate was increasing, and so it only took like 7 or 8 months to make those 40K blocks. Now, in 2021, we've had a bit of a slowdown. We had the China ban, and so actually blocks were found a little slower, and so it could take a little longer. So if you also calculate like, so the 40K blocks more or less times 10 minutes gives us about like 9 or 10 months, right? So, but in 2013 we had like, it was found a little faster, and that was due to the rise of ASICs. And so it's interesting to keep that in mind. And but yeah, in general, I guess still, I mean, if we start making a top now in December, again, like, I think it's best to look at some other indicators, like to see also if we're near the peak, right? So you look at other on-chain indicators and also user growth, like the network growth, and so, you know, to kind of estimate the top, to have a better estimate.
Amazing stuff. And what about this one over here? We have another chart over here. This is showing.
Yeah. So exactly. So I like to look into like also in the previous chart, I think. Can we go back to the block chart still one more second? Yeah, I highlighted the all-time highs, right? So and if you look at, so in 2013 we only had 52 all-time high days basically. So that's
these blue dots over here.
The blue dots, you know, yeah, the blue dots there and there, yeah, those together, they're more or less 52 all-time high days that we made. Now in 2017, those were 71 all-time high days. So those blue dots, and in 2021, we've only made 28 so far, right? So so it's definitely likely that we will see like more all-time highs days in the next months to be in line with history. And and then to go to the next chart,
is it fair to say that, you know, expectations, again, everything we're looking at, we're just trying to get some type of awareness of where we should be. You know, is it possible that we're, you know, 2021 is somewhere between these two? Is that what our expectation should be? Somewhere
exactly.
around?
Yeah, I would say at least more than now, right? Because we seem to be in a double top, and 28 days is actually very few all-time high days for like a cycle. So it makes sense to make this second top. And so now
more than we have.
in 2017 we had 71 days, which is maybe on the higher side because, you know, we had kind of this, you know, we did not have like a blow off top and then like a long time no all-time highs, right? And we did have that now. So we could, I mean, maybe making 71 days is a bit like high, you know, but I would expect to get to around 50 at least, you know, like also for 2021. So that's still quite some all-time high days to go.
Good. I like how you manage expectations very well.
Yeah, so this is in the time chart, and I love how this lines up again. So if we look closer, so I colored the cycles here. So the 4-year cycle, so the 2009, 2013, 17, and 2021. You know, the green, yellow, orange, and red, pinkish. So, and then again, you can see the all-time high dots here, and you can see the similarity. I mean, it's just amazing, in my opinion, how all of these all-time highs were almost made in this first quarter circle, right? So, yeah. And you can see in 2013 how we made these, you know, all these all-time highs on the beginning and on the end. And, you know, since we have such a similar behavior, I would definitely expect like to make some new all-time high days within the next months. And again, holding in mind that we've only made 28 days so far, you know, this cycle. So yeah, I think this is very exciting.
I mean, the amount of vantage points that you just lined up Bitcoin from, giving us so many different views to go ahead and line our sights in and make sure that everyone's able to get a good look at what's happening from so many different angles and perspective. Root, again, Root, you're part of the dream team here, helping provide so much value for everyone out there, all across the world. So grateful to have the opportunity to sit down and talk with you. Thank you for doing that once again, Root.
Thanks, Jordan. I appreciate the compliment.
All right, Root. First of all, so far you've absolutely crushed it. What a good discussion. Really think that people are really going to enjoy this.
Yeah. No, yeah. I think it's good to dive a bit deeper in these charts and.
Yeah. So what are we looking at here?
So here again, so we're zooming in on these blue dots from the last chart. So if we just go once back to the last chart.
Okay. So in the first part of the cycle, we're looking at the blue dots.
So yeah, so all these blue dots actually, they, and in the same color, they represent here the cycles. So I colored those blue dots now back to the color of the cycles in this chart, and we look at the increase, just on those blue dots, and then we can see like a nice pattern, and then you can see how steep, the 2011 rise was, which makes sense again that the RSI value was so high. And in 2013 we had obviously quite steep, but in 2017, and that's the interesting part, is that we're in between 2017 and 2013 currently, and so far this cycle was like steeper, and again that proves a bit the point, and actually what Plan B also mentions is that 2017 might be the outlier here, like that. So we could see a steeper increase, and so I'm really waiting for like a new all-time high, or at least a few new all-time high days, and that will give us like a very good indication of, if we keep on following this price floor that I drew here in 2021.
How do we get this price floor, Root? I'm not exactly sure how you're getting the slope of this price floor.
Yeah, no, this chart is not as intuitive. I have a whole thread on this on Twitter as well that goes deeper into how this chart exactly is made, because it's a little difficult, to understand. But so we're only looking at days that we make new all-time highs here. So this chart basically can only go up, right? Because there's no drawdowns on days that you make a new all-time high. Okay. But then we look at the cumulative percentage increase that you make on one of those days, and then we can see that we follow this pattern, and these blue dots, those are actually representing the mid-cycle, basically, so in 2013 we had this mid-cycle dip, this whole consolidation period that took basically like nearly 200 days. That happens in that blue dot, right? But at some point we make a new all-time high and we start continuing this track of 2013, and you can see that we end up even like above that line, so. And so the trend line I draw, so the price floor basically, I draw from the start, so the start of the cycle, the zero, and I draw that through the mid-cycle basically. So and then the mid-cycle dot. So I draw this line there through that there, and you can see that we've always ended up above it, and especially in the end we get this blow off top, right? So you can see in 2013, very, that's basically the blow off top, and in 2017 you can see this happening as well. And so in 2021 I would expect to happen for this to happen as well. And in my opinion, it's likely that we end up somewhere like between these pink red dots on the price floor. So that first dot is 140K more or less, and the second dot is 390K, so nearly 400K. And so, but yeah, so I would expect that we, like, to be again conservative, is that we would at least reach the first dot of this price floor. And then the question is like, will we remain like really on the line, or will we like end up above it? Because if we end up above it, the price can still be higher, right? But if we end up more or less around that line, then it would give a price of 140K. But if we end still like, so if we get like a blow off top also, and we have like higher percentage increases on all-time high days, we might see even like 200K, even though we will only be around that, in terms of days, we will only be at that first dot. So I think that's a very interesting view, and I think this chart will, in the next months, if we make at least 1 or 2 or 3 all-time high days, it will give a very interesting insight to see, are we gonna, go less steep, or are we gonna go steeper, or do we continue this path? And I think that will give us like better estimates of where the top might be.
Good stuff. I'm really looking forward to seeing a lot more of these days about to appear. These blue dots on the back end of the cycle over here seems to be where we're headed. You've kind of, from multiple different angles, been able to pinpoint approximately when that's going to be and why, and then go further and looking about what the what happened in the previous cycles as far as how many all-time days we had altogether, what our expectations should be, and even giving us, well, assuming that we have at a minimum as many all-time days, new all-time high days as we had in 2017, that puts us approximately right around here. Price would then be around $140,000. That's not assuming any type of blow off top. Really
exactly.
Good expectations.
Yeah. So I'm really waiting for those blue dots to happen, and I think once we make a few blue dots, it will give interesting insights also in like what we could expect in terms of like diminishing returns and stuff like that. So it will give very interesting insights. So I'm looking forward to that.
Well, that was an interesting observation. I think you could visualize it pretty well here when you look at the slope and you say that, well, seems to be a little bit more powerful than the 2017. I never really viewed it, that perhaps 2017 was the outlier, and now we're kind of back to
Plan B talks about this sometimes, and he actually also gave this estimate after I posted my chart as well. He gave this estimate of that the bull market still could continue for 6 months, based on his on-chain indicator. He has also a chart where he uses on-chain data to reflect where we are basically in the cycle. And then he said only like a few days ago, he said we could continue still maybe for 6 more months, which actually would be in line with indeed this halving cycle. So that lines very well up.
Right around where you have this projected range using blocks somewhere around February into March.
Yeah, exactly. So that is interesting to note. And we'll see. The next months are actually really exciting months, to be honest. And as it looks like we're going to make a new all-time high soon, and so that will give us new info, and we will go from there. We have a lot to discuss after that again.
Yeah, Root. I mean, tremendous work that you just handed out to the community. You're dropping carrots all day long. No, serious, valuable information, and just an honor to be able to sit down and discuss these things with you. Thank you for making yourself available to us all and making sure the Root is good for Bitcoin. There's no question about that.
Thanks, Jordan. I like to get to the root of things, and you do too. You've been doing excellent work, and I keep on following your work on Twitter as well. So it's cool that our things align as well, and that we go different paths, but we find so many similarities, and so it's really great to see you're doing excellent work. Thank you.
Thank you. And I love to be able to go ahead and kind of just affirm, check. Just like you said, there are people talking about maybe a change of behavior in 2022. I want to be aware of that in case I'm seeing that. Right now, everything seems to line up and rhyme. This work you did with the blocks and the potential, what if we don't see that behavior showing us we're having any type of blow off top in December, at that point, then it gives us a really good expectations of what might be following coming up after that. So Root, we're grateful for you. We enjoy you. You put out phenomenal work, and thank you so much for taking the time to help walk us through all of this.
Thanks for having me, Jordan. And we'll keep in touch for sure.
Bye, Root.
Bye.